Welcome to House Lux Estate, your trusted source for insightful topics on investments and the real estate market. We're excited to have you with us as we explore an intriguing subject today. Why is gold so expensive? Gold, that shimmering precious metal, has captivated humanity for millennia. But beyond its aesthetic allure, gold holds significant value in the economic sphere. It's not just a piece of jewelry or an ornament, it's an asset, a form of currency, and a global symbol of wealth and power. Understanding the value of gold and the factors that contribute to its high price is crucial, especially if you're navigating the world of investments. Today, we'll take a journey through time, from the ancient gold mines to the modern trading floors, to uncover the truth behind the glittering facade of this precious metal. Stay with us as we delve into the fascinating world of gold and its high price tag. Gold, a symbol of wealth and power since ancient times, remains a coveted asset today. But how did this shiny metal rise to such prominence? Let's delve into the fascinating history of gold. From the banks of the Nile to the Roman Empire, gold's lustrous appeal has been irresistible. Ancient civilizations were smitten by its beauty and rarity. The Egyptians, as early as 4000 BC, revered gold, using it to adorn pharaohs and their sacred temples. Fast forward to the Roman Empire, where gold coins became a popular form of currency. The Romans were the first to develop a system of gold coinage that was widely recognized across various regions. This not only established gold as a symbol of wealth but also as a medium of exchange. But gold's prominence didn't stop there. The allure of gold led to explorations and migrations, shaping the course of human history. Remember the California gold rush of the mid-19th century? Thousands flocked to the Golden State, bolstering its economy and population, all in the hope of striking it rich. In the 20th century, gold continued to hold its ground, even as world economies shifted and evolved. During the Great Depression, countries like the United States clung to the gold standard, a system where the value of a currency was directly linked to gold. This highlighted gold's significance as a safe haven during economic crises. But what makes gold so valuable? It's a combination of scarcity and durability. Gold is rare, and this rarity underpins its high value. Additionally, gold is resilient. It doesn't corrode or tarnish, making it an enduring symbol of wealth through the ages. So, from ancient pharaohs to modern economies, gold has maintained its status as a precious metal. Its historical significance, coupled with its rarity and durability, has cemented its position as a symbol of wealth. Now that we've grasped the historic importance of gold, let's move on to its extraction process. Mining gold is a complex and energy-intensive process, contributing to its high cost. Let's start from the very beginning. Exploration. This phase involves geological surveys, satellite imagery, and exploratory drilling. In short, it's about finding the proverbial needle in the haystack. The costs here are astronomical, and the outcome uncertain. It's a gamble where the stakes are sky-high. Next comes extraction. Gold is often found in hard-to-reach locations, deep underground. To get to it, miners have to build intricate tunnel systems, which are not only costly but also risky. Given the depths we're dealing with, the risk of tunnel collapses and other accidents is ever present, adding to the already substantial costs. After extraction comes ore processing. Gold is rarely found in its pure form. More often, it's mixed with other minerals. Extracting gold from this ore requires crushing it into a fine powder, then using chemicals to separate the gold. This process is not only expensive, but also has a significant environmental impact. The chemicals used are often toxic, and improper disposal can lead to environmental damage and health risks. Finally, we arrive at refining. This is where the gold is cleaned and purified, transformed from rough nuggets into the shiny bars or coins we're familiar with. Refining requires high heat and specific chemicals, adding more expenses to the tally. Throughout this entire process, there's also the cost of labor to consider. Mining is labor-intensive, requiring a large workforce. Plus, the industry is heavily regulated, with companies needing to invest in safety measures and meet environmental standards. And let's not forget about the financial risk. Gold prices fluctuate, and there's no guarantee that the price at the time of extraction will be the price at the time of sale. Miners are playing a high-stakes game, where the potential for profit is balanced against the risk of significant loss. As we can see, the cost of sourcing gold is high, but that's not the only factor driving its price. Gold's value is not just about its physical attributes or extraction cost. Economics plays a huge role. Indeed, The dynamics of supply and demand are key players in determining the price of gold. As with any commodity, when demand for gold increases and the supply remains steady or decreases, the price of gold is likely to rise. Conversely, if the demand decreases or supply increases, we can expect a drop in gold prices. Now, what drives this demand and supply? A multitude of factors come into play. Let's discuss a few. Firstly, inflation. As the cost of goods and services rise, the value of currency tends to fall. This is where gold steps in. Its value often increases during inflationary times because it's seen as a more stable investment compared to currency. In other words, people often turn to gold as a hedge against inflation. Secondly, currency fluctuations. Gold is priced in US dollars on the global market. Therefore, if the dollar weakens, gold becomes cheaper for other nations to buy, driving up demand and consequently the price of gold. Thirdly, central bank reserves. Central banks around the world hold gold as part of their reserves to instill confidence and stability. When these banks increase their gold reserves, it can drive up the price of gold due to increased demand. Lastly, geopolitical instability. Gold is often termed as the crisis commodity. Why so? Because during political and economic uncertainty, investors flock to gold as a safe haven, driving up its demand and price. These economic factors, coupled with its inherent scarcity, make gold a reliable store of value, especially in turbulent times. So, while the lustrous yellow metal certainly does have intrinsic value due to its physical properties and the cost of extraction, the price tag on gold is greatly influenced by the whims and waves of global economics. It's a dance of numbers and narratives, a tango of tangibles and intangibles, and that's what makes the world of gold, glitter and all, so fascinating. Despite advancements in technology and the rise of cryptocurrencies, gold continues to hold its ground. This precious metal, with its lustrous glow and inherent value, has been a cornerstone of wealth and economic stability for centuries, and it's not going anywhere anytime soon. Looking ahead, the future of gold appears to be as bright as its surface. The ongoing demand from various sectors ensures its relevance. Let's break it down a bit. In the realm of jewelry, gold's allure remains unmatched. It's a symbol of wealth and status, a timeless fashion statement, and a cherished heirloom passed down through generations. This demand alone sustains a significant portion of the gold market. Then there's the electronics sector. Gold's excellent conductivity and resistance to tarnish make it an essential component in a wide array of electronic devices, from smartphones to life-saving medical equipment. As technology continues to advance and become an even more integral part of our daily lives, the demand for gold in this sector is only expected to rise. And let's not forget about investment. Gold has long been seen as a safe haven in times of economic uncertainty. In a volatile market, investors often turn to gold as a store of value, a hedge against inflation, and a means of portfolio diversification. These factors contribute to its enduring appeal as an investment asset. But what about the potential impact of space mining on gold's value? It's an interesting question. If we're able to mine asteroids for gold, could this flood the market and devalue the precious metal? While it's a possibility, it's important to remember that space mining is still in its infancy, and it will likely be many years before it becomes a reality, if at all. Gold's future looks bright, but like any investment, it's not without risks. The value of gold can fluctuate, and there are costs associated with buying, selling, and storing it. However, its proven track record, enduring demand, and potential for growth make it a compelling prospect for the future. So why is gold so expensive? It's a combination of its historical significance, extraction costs, economic factors, and ongoing demand. Throughout history, gold has been a symbol of wealth and power, enhancing its perceived value. The process of mining gold is complex and costly, contributing to its high price tag. Furthermore, economic factors such as inflation and currency fluctuations play a significant role in the price of gold. Moreover, the demand for gold, whether for investment, industrial use, or jewelry, keeps its value high. Understanding these factors can provide valuable insights when considering gold as an investment option. It's not just about the glimmer and glamour, it's about the intricate web of factors that determine its cost. Thank you for joining us today at House Lux Estate. Don't forget to subscribe for more insightful videos. Until next time, keep investing wisely.